So in my latest video, I had taught you guys a simple gap trading strategy that we use to consistently make money within the stock market. Well, there was an opportunity to use that same exact trading strategy that I had taught you within that video today. And the question is, did you take advantage of that money-making opportunity? Because I ended up taking advantage of that opportunity, and the calls that I had bought went up 70% very, very quickly. With that being said, I'm going to be recapping the trade alerts, and towards the end of this lesson, I'm going to be sharing with you some levels that I'm looking at into this week for potential trades to go short with puts and long with calls. Let's get straight into the analysis. So in terms of the SPY, the trading strategy that I taught you guys in last week's video was the gap close reversal, the simple gap trading strategy. And I'm going to walk you through all the patterns that I saw in terms of this trading strategy, because as you can see, in terms of Trader Society, I alerted to my team in real time that I had bought 484 call options at 30 cents, and these quickly spiked to over 70%. And I had clearly pointed out the pattern at 1:40 p.m. on what it is that I was seeing. If you just visually look, this was the same exact trading strategy that I taught you in the last video. You know, out of the 1,400 people who watched that video, I wonder how many of them chose to buy call options at the time we did. So you can see right here in terms of the pattern, SPY ends up gapping up. It opens up higher than it previously closes. This is a 30-minute chart. And then you could see it downtrends sideways for 2 hours. You see how it downtrends sideways for 2 hours. And then once that fourth bearish 30-minute candlestick closes, it goes super bullish next 30 minutes. So you can see the same thing happen again. There was a gap to fill here. It closed the gap. It had a reversal once the 30-minute closed red after 2 hours of downtrend sideways. So right here, you can see SPY ended up gapping up. This black line is the previous closing price where the gap is waiting to fill. You can see the SPY had 4 red bearish 30-minute candlesticks in a row downtrending sideways. So guess who decided to buy call options towards the opening of the next 30-minute candle with anticipation that it was going to close super green and bullish for those 484 calls to start to go in the money. They almost went in the money, but the point is they went up nearly 70%. So that's what I decided to do in that situation. In terms of the patterns, you could just see this is very clear. You have 4 bearish red candlesticks slanted to the sideways, and then after the fourth one closes red and bearish, the SPY opens up green and super bullish, and the bottom is towards the low of that previous 30-minute, and then it goes super bullish. And then you can see the same exact pattern right here, except this time the SPY gapped up, and then, 4 30-minute red bearish candlesticks sideways. Once it closes the gap on that fourth bearish candlestick, it opens up towards the lows on the next 30 minutes, and then that's when you start buying for that green bullish pattern. So same exact situation right here. You had 4 red bearish 30-minute candlesticks in a row. You can see it's actually green on Thinkorswim charts, but if you use the TD Ameritrade mobile app, which is what I use to trade and on my charts, you can see it was actually red. They counted it as red in that situation. So I looked at the pattern and I told myself, it nearly filled the gap and it bottomed at this previous resistance level. And another bullish pattern that I saw that not too many people, I believe, that saw was this right here. If you just look at the bottoming, you could see right here, if you look at this exact red candlestick right here, it looks literally identical to this red candlestick right here. And then what happened next 30 minutes? Next 30 minutes, it went green and super bullish. So if you just analyze these 2 candlesticks right here to these 2 candlesticks right here, it's literally identical. So I combined that candlestick pattern with the 4 slanted red pattern with the gap close reversal pattern. So in that situation, I used 3 candlestick patterns to make that trade. I used this one right here where this red candlestick looks identical to this red candlestick if you just compare it. And then I used the 4 slanted red candles. Then I used the 4 slanted red candles. And then I used the gap close reversal. So you can just visually see right here. This is very visual, right? Very visual information. If we just pull it up, you can see literally at 1:40 p.m., last time the gap filled at the 4th red 30-minute candle in a row, the trend reversed for a strong close. So history repeated itself. Now the trend did not, go super bullish for that strong close, but it did have a strong bullish 30-minute candlestick. And then if you're wondering, well, how do you know if it's going to continue to go super bullish and have a strong close like last time? Well, if you were to hold for the entire 30 minutes, it did end up closing strong at the highs, which is confirmation for you to keep on holding those calls. But history is not always going to repeat itself in exact T. It repeats itself in similar cycles. So in that situation, you could see last time when it formed this 30-minute green candlestick right here. So if you just look at this 30-minute green candlestick right here compared to this 30-minute green candlestick right here, this is all identical. 4 slanted red, closes the gap, and then this green bullish 30-minute with a small little wick at the top, green bullish 30-minute with a small little wick at the top. So you just look at where it bottomed last time. This is how you can measure if a move is going to be bullish or bearish. So in terms of where it bottomed last time, you can see it bottomed towards the closing of the 30 minutes. So that's your max risk. So basically, if history is going to repeat itself, then it has to bottom and form a floor and hold and form bullish confirmations on multiple time frames at the previous closing 30-minute right here. That's where it would have to do it. Meaning, if the SPY were to go under the previous 30-minute, which was right here, so if you were still holding calls and you were using that pattern, if it were to go under this price right here, 483.80, then you start cutting the position and you start getting out. And no matter what, you obviously scale out into the rips. So it made very logical sense to continue to hold those call options, but you have to scale out some on the rips. And if it starts to go below where the pattern's not going to repeat itself, which means like if it goes below this red line right here, you start scaling out and you start closing out the position, because that basically means that the SPY is cracking the key level and history is likely not going to repeat itself because it's cracking that major level, right? So in that situation, you just would have been stopped out for the rest of your profits. But the point is, man, that was a phenomenal trading opportunity for calls. That was the main trade that I did have on the day. I did have a couple trades as well, but that was the main one that offered the educational value, because not every trade you make is going to be even interpreted as like an education value in terms of something you can teach, because in terms of some trades that you make, they literally just happen in the moment and they can't be explained, and then once the trade's over, it's over. But in terms of a trade that can be explained with educational value, that can be one. And in terms of those types of trades, I will always in that situation try my best to provide the education in real time. It's just I have to focus on the actual trade instead of providing all of the education. But in terms of those situations where I believe a trade is genuinely based off of that education, I do always provide my analysis and what it is that I'm seeing. But if I'm seeing something where it just happens in the moment and there's no explanation and it can't really be explained, then in that situation, I'll just alert the trade and I'll provide updated analysis with, scale in, scale out, exits and stuff like that. So every trade's different, but any real trader would know that not every single trade is purely educational. Now, if you wanted to, you can trade just purely educational off of certain strategies and patterns and levels and stuff like that. But some trades are literally just made directly in the moment. And then once you get to that level, you just have to decide if you want to trade those or not. Me personally, I trade everything because it literally works with the strategies I have. I'll trade it. But yeah, I just wanted to share that strategy with you guys. Now, in terms of some levels that I'm seeing for the SPY, this is what I wanted to bring awareness to. So I am seeing a daily pattern on the SPY where if we do move up, if we do gap up, it is likely going to try to drop at one of our levels. So this is what I want you to keep an eye on. The higher the level, the better. But if you get a great 30-minute bearish confirmation at the lower level, then by all means, you can go for it. But this is what I want you to keep an eye on. The lower level is going to be 800. It's going to be a 484.10. That's going to be our lower level to keep an eye on. And then the level above that is going to be 484.70. So somewhere between that zone heading into tomorrow, I want you to keep an eye on put options. Use like those 30-minute bearish confirmations or the 30-minute trend reversal confirmations and just keep an eye on put options for that zone. Now, again, this is all based off of a daily pattern that I'm seeing for tomorrow where the SPY is going to try to top towards that zone for a nice scalp on some puts. So if you get the confirmation, you see the level, you like the trade, then you could take it, using what you've learned on your own as well. Now, in terms of call options, for call options, this is what I would keep an eye on. So we already reversed at the gap, so I'm not too interested at the gap right here at 482.43. We already hit the reversal today. We're not going to sleep on that strategy that I posted in my last video. We're going to use that all fucking year to make money. But in terms of the next levels, it would be the following. So we could potentially see a bounce at this level right here. It's going to be at 478.50. You can wait towards this 478.50 to 479 zone for a potential bounce. And then one of my favorite levels that I'm keeping an eye on is going to be 476.60. There is a gap that is waiting to fill below here in the middle that has not been tested at this 476.50. So if we are seeing some sort of 30-minute pattern at this gap at 476.50, we will be looking to play that, whether it's calls or puts. Obviously, in advanced, we'd be interested in calls because it's more oversold and the gap hasn't filled, so we'd be interested in calls. But if there's a bearish red 30-minute, we might try puts. And you just have to understand that, certain confirmations that look bearish are actually bullish if the key level is oversold, and just understanding that. Like I said, not too many people would have pointed out this specific red candle right here, and then it goes super bullish. When I saw that same red candle form right here towards the gap, along with the 4 slanted red candles, I knew next 30 minutes was going to be super bullish. And those calls that I ended up buying, it was the 484 strike. During that time that I bought, those calls quickly went from 30 cents all the way to like 50 cents. They absolutely skyrocketed. They went up over 70%, and they did that multiple times throughout the day as well. So yeah, that was a phenomenal trade. Now, with that being said, that's going to be my overall analysis on the SPYs, just some things that I'm seeing. If you guys do want to be a part of Team Roar, that is what we are currently offering. You can follow G-Roar's trades inside of Team Roar, and you also get access to the Roar chat. That is going to be the first link down below in the description. With that being said, I'm going to be wrapping up today's lesson, and I will see you guys tomorrow within the trades, within Trader Society. I will see you guys then.